What I'm about to show you will change the way you look at stocks forever. Hey, what's good? It's your boy Matthew Michael, and in today's video, I'm going to show you how to find large stock gap ups like this before they happen. And the only thing I ask in return is that you destroy the like button. Without further ado, let's get into the video. Today's video is brought to you by TIBLIO, a complete crypto stock trading system with pro-level tools, real-time market data and news, as well as the fastest scanners in the market. TIBLIO provides traders with the leading tools and fastest data in the market so that you and I can find the best opportunities to maximize profit and build wealth. Today, when you sign up for TIBLIO Pro, you'll also get access to my Discord as well as the TIBLIO Active Trader Discord for free. TIBLIO Pro is only $34.95 each month, or get 2 months free by paying for the whole year upfront at an annual price of $349.50. Not sure if it's worth it? Sign up using my referral link down below in the description and get 7 days for only $1 with all the trades, the trading journal, the screeners, not to mention the Discord and everything else that TIBLIO has to offer. I can pretty much guarantee you'll love it. Now back to the video. It'd be pretty amazing if you could find moves like these before they happened. Well, good news is you can, using supply and demand trading. What is supply and demand trading, you ask? Supply and demand is a trading strategy based off of price action. When you see large stock moves like this, just know that it's not from a retail trader. This move right here was brought about by the big banks and institutional traders. And one of the things that you want to know about this move right here is that it happened so fast, so violently. There is a 99.99% chance that all those orders did not get filled, that there are still orders at that level. And a move like this can have you asking the question, did anybody get left behind on that move? It's usually where you see these moves, where you're going to end up charting your supply and demand zones. But don't click out of this video just yet. I still have so much more to tell you about supply and demand. Asking yourself the question, did anybody get left behind on that move, is going to be very important whenever you're choosing where you want to chart your supply and demand zones. And now that you have kind of a basic general idea of what to look for, let's get into some differences between supply and demand. Supply is going to be your trade signal to short the market, whether it's buying puts, shorting a stock, or buying an inverse ETF. Coming off of supply, you want to play the downside. I remember I used to get supply and demand confused, and the one thing that kind of helps me remember is that in supply there are 2 P's, and because there are 2 P's in supply and not in demand, the 2 P's in supply just make me think of puts. So really you only need 1 P, but just because supply has P's makes me think, hey, it's in supply, I'm getting puts. And with that being said, demand is going to be your market signal to long the market. So this could be buy calls, buy shares, whatever you want, you're playing the upside. Now supply and demand zones, that is fair game to hop in plays, but there is usually area in between supply and demand. This area in the middle, that should be seen as no man's land. Think of this area in the middle as the demilitarization zone in between the Koreas. You don't want to mess around in that area. You can get burnt really bad messing around in that area. You can think of trading in this area as where contracts go to die. A stock can consolidate and trade in a range for days on end. Like as of right now, when I'm recording this video, for the past 2 or 3 days, the market has pretty much been trading sideways in a range and has not given any action, and it has been chilling in this demilitarization zone. And for me personally, that is a zone that I do not want to be found in. So with that being said, you're going to want to make your trades coming in and out of the supply and demand zones. Be sure to stick around to the end of the video so I can show you what this looks like. And I promise we'll go over all that. I just want to quickly get into some market psychology before we get into how to set up the zones and when to place your trades. Let me start off by reminding you how important your trading psychology is. First off, with any kind of trading, if your head is not in the right place, get some sleep, get some food, get some therapy, whatever you need, like fulfill that need first. If you're coming into a trade nervous, you're not going to be able to stick through till the end of a trade. I can't tell you how many times I perfectly charted a trade. I get in the trade pulls back just for a little bit, I sell out, and of course I continue watching to see how the trade did. and the trade follows my chart perfectly. It's happened too many times. So before you hop into any trade, make sure your mind's right. Make sure you have some sort of plan. Once you have a plan, once you have a structure, trading should be basic. And honestly, if it's not kind of boring, you're doing it wrong. Also, with that being said, you don't need to trade every day. You know how much money you want to make. You know how much money you need to make. You probably have goals, and hopefully they're attainable to something that you can actually maintain. Because while, yes, there will be some massive, like beautiful breakout trading days, those beautiful breakout trading days where you have like a $10,000, $20,000, $40,000 day, they will mess you up. They will have you thinking you cannot lose. And honestly, when you have those days, that's probably the perfect time to sit on your hands for a few days and really just figure out what the market's doing. There are times when the market picks up steam and there's a lot of euphoria, and that can just get clapped so quickly. So when you see those profits, don't forget to take them. And yeah, I'm not saying you can't make money every day, but 9 times out of 10, you're not going to see the perfect setup every day to trade. Overtrading is a thing. It happens to a lot of people, and really the only people who makes money when you overtrade are the market makers and your brokerage. So be sure to have other hobbies aside from trading. Like for me right here I am with YouTube. I like to read. I like to go out, be outdoorsy and stuff. Find some hobbies, because if you're just sitting at home and you got these screens right here in front of you and you have nothing better to do, you will find your way back to the market. So yeah, just have hobbies. It helps a lot. And again, I know this section is a little off topic. I'm trying to address the psychology of trading, and I expect this video to help a lot of people. So I really want to stress these things. Do not get into trading hoping to quit your job right away, because, well, and maybe your first month, you hop in, you trade, you could make more money than you probably make working a job in a year. But thing is, with the trading, unless you pull the money out and you have some sort of plan and structure and all that, that money can be lost just as fast as you made it if you get a big head, which I would say happens to a majority of traders when they first start trading, or whenever they first start seeing success. Don't consider yourself rich or wealthy until you have sources of income that you don't have to work for. Trading, while it's better than working like at a job, trading is an active source of income. You have to be there to trade. Take that money and buy some income streams for you. Build more streams of income. They say the average millionaire has like 7 or 8 streams of income. So yeah, do that. But also, with that being said, I think this is a great time to say I am not a financial advisor, and this is not financial advice. It's your money. Do whatever you want to do with it. I just make these videos to show you what's possible. And now I think I said enough. If you don't pay any attention to anything I just said, that is on you. But I have said enough for you to have your mind right. So with that being said, now I'm going to tell you how to chart supply and demand, and then we'll go over a live example together. So to start out, you may want to take some time and write this down. I know I did whenever I first learned. So to start out, the bottom of the supply zone is going to be where the last bullish candle opened. And the top of the supply zone is going to be the latest high before the big drop. And demand is going to be the opposite of supply, where the bottom is going to be the most recent low before the big move up, and the top is going to be the open of the last bear candle. Some things to know when charting are going to be: pay attention to larger time frames. Large institutions and banks aren't going to be watching the 1-minute time frame. And because of this, typically when you're charting supply and demand, you want to use what's referred to as top-down analysis. Top-down analysis is going to be starting with larger time frames like the daily chart, then maybe you'll move to the hourly chart, and then maybe you'll move to the 5-minute chart. And you know, that is how you will go through and set up your supply and demand zones. Another thing to consider when you are analyzing the market is you don't want to overanalyze the market. So it's best to find 3 time frames that you like and stick to using those. So maybe one smaller like the 5 or the 15, and then again, you can look at the hourly and the daily chart. Some other things to consider when you're looking for where you want to chart is that consolidation with a small breakout, that's weak. Whenever we're charting supply and demand, we want large, strong movement. Institutions aren't weak. They really move the market. So while this small breakout is movement, it is not large, violent movement. The faster and more violent a move happens, the more likely it is to happen again. Remember, it brings us back to that question. That move happened so fast. I wonder if somebody got left behind. And now with that being said, let's hop into charts and go over everything that we learned. Real quick, before we get into charting supply and demand, I just wanted to take this time to let you know that if you haven't already taken advantage of it, WEBULL is giving away up to 12 free stocks when you sign up and deposit as little as $1 using the WEBULL referral link down below in the description. And just a heads up, whenever you sign up using that link down below in the description, not only do you get 12 free stocks, but I get a free stock as well. So for those of you that sign up using my link down below in the description, thank you. But I'm pretty sure if you decide to just go to their website, it'll also work that way as well. So without further ado, let's hop into the charts. All right, so here we are. We are looking at NVIDIA. We are currently on the 1 hour chart. Just so you know, I personally like to go 1 hour, 15 minute, and 5 minute chart whenever I am charting supply and demand. And again, we are looking for big, violent moves. All right, so right here, this probably looks like the latest supply zone right here. And what's going to be most important when we're looking at the supply and demand are going to be the more recent zones. So yeah, the way we're going to do this, again, we're starting with our top-down analysis. So what I'm going to do is on drawings, I'm going to, not a horizontal line, I'll come over here and I'll find a rectangle. And since this was a big move down, we're going to be drawing a supply zone. So for the supply zone, the bottom is going to be at the open of the last bull candle, and the open is, since bullish candles are going up, it's going to be where this wide part is, the lowest wide part. And then the top is going to be the most recent high before the drop. All right, so right there, that is going to be our supply zone. All right, this is the 1 hour supply. All right, so I'm going to label that. I'm going to get some text, and I'm going to label this 1 hour. I'm just going to label it 1 hour, just so I know that that's the 1 hour supply. Take that, throw that right there. There we go, 1 hour supply. All right, now I'm just going to drop down to 15 minutes to see if it looks any different. All right, so the 15 minute, again, drawing another rectangle. 15 minute would be the open of the bullish candles right here. Again, they have the same high. So I'm going to stop that right there, and then I'm going to get more text. And I am going to call this 15 minute. All right, I'm just gonna slide that, leave that right there. And right here, this is the 1 hour supply, 15 minute supply. Right now they're pretty close and almost overlapping. And then I am going to get one more triangle. I'm gonna drop down to the 5 minute. And we're gonna take a look and see. So the 5 minute looks a little bit different. So the open, the last one is actually right about right here, and the most recent high before the drop is actually up here. So I will take this, I'll slide it over. Honestly, looking at it, I'm gonna real quick come to this one. I'm gonna delete the 15 minute supply and delete that. And I am going to get some more text, and I'm going to label this 5 minutes. All right, so just like that, this whole zone up here is going to be our 1 hour supply, and this whole zone right here is going to be our 5-minute supply. All right, so this is honestly something we'll have to look at in the future. But now that we've charted that, let's actually find our most recent level of demand. All right, kind of looking at the 5-minute. This right here could be a 5-minute level of demand, but I'm actually going to go back up to the 1 hour and see if I can find another level of demand lower than this. All right, so the next level of demand lower than this that I would see on the 1 hour for demand, you're going to go at the open of the last bearish candle. Oh wait, let me actually delete that. For demand, we're going to go at the open of the last bearish candle, which is going to be right here. And we are going to do the most recent low before the big move up. I'm going to try to move this as far over as I can just so I can see it in the future. And that is going to be right there, just about 170. Honestly, this range looks tight enough. All right, so now we have that drawn. Now I'm going to throw in some text. I'm going to label this 1 hour. 1 hour. I'm going to save that. All right, we got that there. Here, let me go ahead and slide that inside. All right, and next up, drop to the 15, see if it looks any different. It's kind of way back here. All right. Not too much different on the 15. Let me drop to the 5. See if we look any different on the 5. Again, I still, all right, it's a little bit higher on the 5. So what I'm going to do is I'm going to come right here, open the last bearish candle, click right there. And then the most recent low before the big move up is about right here. Yeah, the most recent low below the drop is about right here. Now I'm actually going to try to slide this all the way over here. All right, so I'm having trouble sliding it over, so I'm just going to leave it right there. And I'm going to draw a horizontal. I'm just going to draw 2 lines for support and resistance just so I know they're there. And this is how I would look at my supply and demand. I'm going to move back to the 1 hour just so I can get back over here. And looking at this range is kind of wide, but if I saw NVIDIA come down here to this 1 hour, here, let me slide this down here. If I saw it come down here to the 5-minute, I would expect it to bounce back up. Let me back out. I would expect it to bounce back up. The next level of support is 173. I would look at it to kind of fight above that and really look for it to come back up here to this level of supply. Or actually, there looks like there may be another zone right here. Just for the sake of time, I'm not going to draw all the zones, but assuming there's a zone right here, let's just ignore it for now and talk about how we would play this. Let's assume this is a demand zone that has been drawn at an earlier point in time. And like looking at this chart, this shows you exactly how you would play it. All right, so we'll assume, hey, this came in here, this came in the zone, it kind of traded sideways in the zone for a little bit, from all the way from here up to right here, and then it did its time inside, and as soon as it leaves and it closes like a smaller candle, I would look for a smaller, like a full 5-minute candle inside and out personally. Once it does that, I'm buying calls, and you know, you can ride the calls up from where it left at about 171. takes you all the way up to 178. And right there, that is massive quick profits. All right. So going to the next zone, if we came up here and assuming we were looking, honestly, where we're looking at the 1 hour or the 5 minute, they're both going to have similar results. Something I'll find myself doing if I have more time is, again, like if I see it go and bounce off of the top end, I will go in on a small position and place a stop loss. But ultimately, I'll go in a small position, and then once it comes out and closes a candle is when I will grab like my full position on puts. And again, I'll have a stop loss to keep myself from losing. But once it makes that move, I will intend for it to go to the next zone. And in this situation right here, ignoring like the previous consolidation that could be kind of in this at this 180 level, which is probably honestly where I would have next expected it to go, is since it's kind of broken below that, I would expect it to come down to at least this 171 level, and we have this 1 hour level down here. So I could see this coming down to 170 before having any big strong pullbacks. At that 170 level, if it doesn't go below, you'll personally catch me buying calls. You just learned what supply and demand is and how to set it up. I hope this strategy changes your life the way it changed mine. If you learned anything or enjoyed the video, please be sure to destroy the like button. If you have any questions, comments, anything like that, hey, drop those down below in the comments. And don't be greedy, share this video with a friend. And also, while we're on it, don't forget your free stocks down below in the description. And last but certainly not least, thank you so much for watching, and peace.